All right. Hey, everyone. Mark here, Mark P Markets. Thanks for joining me for another Bitcoin analysis session. We're going to go over a few things here today. Today is Monday. So you guys, most of you know the routine. Okay. My name is Mark Principato. If you don't know the routine, let me explain it to you very quickly. Here's how this is going to work. So first, I'm going to go over the economic calendar, okay, because that's something that we should do each Monday so that we're prepared for the events of the week. Second, I'm going to go through my Bitcoin analysis, right? Part of that you should be familiar with since I published it yesterday in my TradingView article. And then third, I'm going to answer your questions. So if you have a question about a stock or an altcoin, now would be a good time to put it in the channel. I am simulcasting, so you guys should be able to see me on YouTube and over here on TradingView. By the way, TradingView people, if you can't see me, just refresh the browser. That usually solves the problem there, okay? And I'll be checking there the questions. I'll be checking there, looking over there regularly to see what you guys put in the channel. All right, so now would be a good time to begin. Also, if you want to share what country or what city you are from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey, and it's why I talk funny sometimes. All right, so with that being said, let's get this thing started, shall we? All right, so let me just get my slide up here. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now I'm going to make my chart bigger here in a moment. There's just one quick thing I want to announce. And again, this is not a promotion or anything, all right? So don't get the wrong idea. If you look in this platform, right, and you should be able to see where I'm pointing to on my chart. I know it's small, but there's this thing on the bottom called Stock Screener. Now, I don't know if free users of the TradingView platform, I don't know how much of that you can see. You know, I don't know the functionality of the screener because I'm a paid user. So, you know, I've always seen that. But I bring this up because TradingView has three screening tools, right? So the stocks, there's Forex, Bitcoin, that kind of stuff, right? Each tool screens for its own asset class. The reason why I mention this is because it really helps to get familiar with a tool like that because it can help your search for higher probability opportunities be much more efficient. Now, I mentioned that, but there's two things you have to consider, okay? When you use a screener, if you don't understand the essence of the behavior that you're trying to isolate, then you're not going to get very good results from the screener because you have to be able to articulate what you're looking for, okay? And you need to understand why this opportunity should unfold or materialize in the market. And you have to be able to articulate that within the functionality of the screener. So you need to have some experience, all right, to get quality results. Otherwise, for example, you can just put together like, you know, a moving average crossover, and yeah, it's going to give you some moving average crossovers that work and some that don't work. It's the same as a random result, okay? The second thing you need to understand about screeners, when you put one of quality together that actually produces slightly better than random, is that is temporary, okay? Because the market environment will change. If you don't understand, again, the essence as to what you're looking for or how to adjust that information, then your screener will become obsolete and you're not going to understand why. Oh, TradingView, hey, thank you so much for the coins. I know who that is now. That's either Cheplik or that's the other guy. I'm sorry, I can't remember the other guy's name. I got to meet them. Thank you so much. I really appreciate that, okay? And by the way, Cheplik does not wear an eye patch. I thought he was number 2. He's not number 2. Anyway, okay, bad joke. It's an old joke. Anyway, thank you so much, you guys. I really appreciate that. And it was great meeting you guys. Okay, anyway, second. Now, so I bring up this screener here on TradingView, and I'm just going to close that there. But thank you so much for that. Okay, I really appreciate that. I'm mentioning this because my members out there, people that have been following me for a while, some of you have access to this. And I want to let you know that I've talked about auto setups previously. Okay, auto setups is just another word for screener, like the stock screener that you have here, except I used a separate one. Okay, and I'm able to get my screening results into an area that many of you have access to. I'm letting you know that that is now active. Okay, so again, there's no call to action here. You guys know where to find it. I'm just letting you know that now every day between 4:30 and 4:35 p.m. Eastern time, If there is a result that meets bullish or bearish criteria, it's going to appear in that place. If there's no result, nothing will appear. Okay. Now, I also mention this because that's the first step. The second step of this effort that I've been working on is I'm going to include the top 10 or top 20 most capitalized coins, right? The highest capitalization coins, Bitcoin, Ethereum, Litecoin, you know, the whole list. I want to get like maybe the top 10 or top 20 highest capitalizations and run the screens on just that list and push those results into the same place. Okay. So all of you know who I'm talking, you guys know who I'm talking about. You guys are going to have access to that as well. If you have any questions, you know where to find me. Okay. That's all I'm going to say. Now let's move along here and let's talk about the economic calendar before we get into this Bitcoin chart. Now, the economic calendar, have you guys checked it? I hope you have. So you guys tell me, right? Today is the 13th. What do we have tomorrow on the 14th? Can anyone tell me? I like to make this part interactive because you guys should be in the habit of checking an economic calendar. TradingView has one. There are other ones, but you want to be able to filter out and only look at the most important events. What do we have tomorrow? Let's see what you guys tell me. Okay, Jay Watt, you got it. So CPI. Okay, so we have CPI tomorrow for the US. We also have, I believe it's tomorrow, we have the European GDP for Europe. That's not a big a deal, okay? But CPI is, because that's an inflationary number, and that's something that can move markets. So we have that tomorrow. You may want to double check on the exact time that that comes out, because that can affect the dollar and that can affect everything else, okay? And Bitcoin is part of that. Now, on what was it? On Wednesday, and I think, Jay Watt, you got it here. We have retail sales. Okay. The producer price index, I haven't seen that. I haven't seen that on my calendar, but I saw we had retail sales on the 15th, which is Wednesday. Okay. Valentine's Day. I like that. Yeah. Valentine's Day may be an economic factor. It's going to depend personally on your situation, but it may adversely affect you. And it may be more expensive in some places compared to others. As we know, in Dubai, things aren't cheap over there. So I feel bad for you, Jay Watt. Anyway, okay, so thanks for pointing that out. So you guys got it. I mean, those are pretty much the main events for this week that you need to pay attention to. CPI, okay, retail sales for the US, and perhaps that European GDP number that can affect perhaps the euro crosses, right? You want to be aware so that you can mitigate risk in case you're in a position, right? You can either adjust or you can wait until these events come out. And if they're non-events, like a lot of times they are, then you can continue about your business. Okay, does that make sense? All right, you guys, so that's pretty much the economic calendar. All right, Suzanne, hey, yeah, she got it, CPI, cool. So you guys are on the right track with that. That's good, okay? You're not pointing things out like, you know, some of these numbers that don't really mean anything. So it's good to filter that. Now, let's talk about this Bitcoin chart, shall we? And I'm going to make the chart bigger so you guys can see what's going on here. There we go. And let's talk about this. So how many of you read my article yesterday on TradingView? I talked about, hopefully you read the article. I talked about in that article, I said that there was a buy signal, okay, that was materializing. When I wrote the article, I'm going to make this bigger here so you can see it. When I wrote that article, this candle right here, right, that bearish pin bar, that thing was green, okay? And it was basically had generated a buy signal off of this support level that I talked about. Now, in this stream, like I said, the title of the stream is basically how to trade the fake out, all right? How to swing trade this and what to expect. That's really like the whole point of this stream. And I called this, I said, I'm not touching that as a long, although we pulled back into part of the support zone. This right here is the support zone. As you can see, we touched the upper boundary and we generated a buy signal. But why wasn't I in a hurry to get into this thing? Why was I suspect? Well, because I'm going to tell you this right here. This the size of this candle, the magnitude of this bearish movement, right, which I basically highlighted from this pin bar like a week and a half ago. All right, I had not called it a short, but I said definitely don't want to be a long. It's an aggressive short, but it's a tough spot because you don't know how far that short's going to go, right? Then we had this minor support break, during the week. Okay, that was the minor support break, and we took out the range. Now this candle produced a significant amount of momentum, and that momentum, that magnitude of momentum, right? This thing right here, this section right here, you cannot ignore that. So because that exists, I said, you know what? I'm looking for more than a single candle reversal. This green candle followed by, this formerly green candle. This was a green candle right before it closed. That was a reversal off of an attractive area for such a reversal, but the problem is we were going against the momentum. Okay, so in those situations, I prefer a more complex setup or a more developed or more advanced setup. Okay, what is that? Well, it's more than a single candle. So now what do we have? We have a sell signal that basically transpired after what was appearing to be a buy signal. I warned people. I said, if you took that long, right, it was an aggressive long, I can't tell you what to do. So if you took that long, I outlined the risk. I made it clear that I was not going to take, I had no intention of taking that long. I made that clear. You had about 1,500 to 2,000 points of risk. If you're in that thing now, that's what you're looking at on the long side. Now, we had not too long, right after this candle closed today, it generated a sell signal, right? Now, this is where things can be confusing. I thought about, should I call that? But the thing is, why would I call a sell signal going into a support zone in generally a structure, a broader structure that's still bullish? Because we can't lose sight that this structure right here is still in play, okay? And because that structure exists, we have these areas to anticipate. You see that? That's a result of this structure. We cannot forget that. So because of that, I'm not going to go short unless it was a day trade, which I'm not calling day trades, and I'm not taking day trades on this thing. But that's where that would be the appropriate place to play that kind of temporary momentum in order to mitigate the broader risk, which if you're shorting right into a support area. Okay, bad place to be shorting. Now, since that, right, we had the sell signal. As you can see, we're now getting another bullish pin bar. This is what I'm talking about as far as a more complex setup. At this point, we now have 3 candles, or basically 4 candles as part of the setup, not one. This is also a failed low. Right now, at this point, it's a failed low. It touched lower and it's reversing. Now, on top of all this, you need to realize one very important fact that you cannot see on this chart, and that is the NASDAQ. Okay, and I mentioned that in the article. The title of the article was NASDAQ Bear, Avoid Bitcoin. Well, have you seen the NASDAQ today? Let's take a look. Okay, this is the NASDAQ today. Look at this thing. And this is how, is it closed yet? No, we have a little time before it closes. It looks like it's going to close pretty strong. All right. I mean, this thing is up right now 183 points. And interestingly enough, Bitcoin is not following it to the T. And I always warned about that. You can't expect them to follow each other one-to-one. But that's a strong sign on the NASDAQ. And it looks like this bullish structure on the NASDAQ is attempting to continue. Now, it's possible that with some of these economic reports, we have CPI and all that other stuff coming. It's possible that this market can get turned the other way this week. It's possible. But at this point, it's reasonable to anticipate that this is a higher low and a higher high is ahead of us. Okay. There's no guarantee, of course, but that's what the structure is still intact. So this is within reason for longs, right? Okay, so that's the NASDAQ. If you're in stocks, that's what you want to see. Now, back to Bitcoin, right? So with the NASDAQ showing us some strength, Bitcoin is trying to reverse. The thing is, at this point, with Bitcoin kind of behind here, Bitcoin's not even green. It's just trying to follow along. This right here, this situation is basically telling us that it's relatively weak. Okay, because Bitcoin should be doing better than this with a NASDAQ that looks like that. All right, does that make sense? So we need to take that as a warning sign. We don't sit there and be like, oh, I'm gonna just short it now because it's just at the moment it's relatively weak, which means if the NASDAQ sells off over the next couple of days, if that happens, this is likely to outperform that, meaning it'll sell off faster. Does that make sense? So that warning is in front of us right now. So what to do here? Well, at this moment, we don't have a new buy signal yet, so there's nothing to do. If the NASDAQ continues higher this week, then we're likely to see this high right here, 21,895. We're likely to see that get taken out, okay, that high right there, and that will be a new buy signal. That'll be a more complex buy signal, which is more of what I was looking for. I was just hoping that we'd get a better price. But hey, the market doesn't care what I think, right? If that's where it wants to produce it, I mean, that would be the type of structure that would be much more compelling for me, and I'm more likely to call that type of trade as a swing trade long. Does that make sense? And I'd be targeting this area up in here, something like that. Okay, I'm not going to give you some kind of ridiculous forecast. Hey, it's going to 50,000. I'm not one of those guys, as most of you know. All right, I'm realistic. Most of the people in this business are not even qualified to be sharing this type of information with you. Anyway, so does that make sense? You guys have any questions about that? That's pretty much my Bitcoin analysis and how to trade the fake out. Because right now, this thing just faked out 2 times. And it sucked in longs early yesterday, possibly sucked in shorts not too long after that. And this thing is still, the structure is still pointing to the long side. Okay. So if this reversal becomes solid and it basically confirms, because we don't have a confirmation, but if this thing confirms by tomorrow or the next day, there'll be a new long signal in there. And that's the kind that I like to see. A complex long signal rather than a single candle. Is that clear? All right, let me see what kind of questions we have. Hey, we got Beni from New Zealand. All right, Snow, how are you? From Transylvania, Romania. I'm getting more popular in Romania again. All right, cool. I used to be very popular there at one time. Do I have Alex? Of course I have Alex here. All right, my Romanians. All right, I love you guys. Okay, so anyway. So now that's my Bitcoin analysis. Any questions? Now I'm going to start looking for questions for the other markets here, right? So I'm going to be looking for stocks. I'm going to be looking for coins. Tell me what you got. Okay, so let me go through here. All right, so let me just say hello. We got Jay, Mr. Plowkeen, Raman, good to see you. Alice, hey, how are you? All right. So I see a question. Look, that moving average stuff, nonsense. Okay, that's all I can say about it. It's the thing with moving average crossovers is by the time they cross over, the move has been missed. Okay, so there's a place for traditional tools like moving averages, oscillators. There's a place for them, but you have to understand, number one, what they're measuring, and number two, you have to understand their limitations. Okay, so yeah, so I hope that answers your question there. All right, let me see what else we got here. Okay, SPX trying for a triple top. Dollar trying for another leg up. Let's take a look. All right, so SPX. Now see, here's the thing. Now, let me put SPX USD. This is the S&P 500. All right. I mean, look, it's the Nasdaq chart. This basically the S&P is the actual leader. Okay, it's a bigger market. It's the actual leader. If you look the other day, what was this, Friday? Look at the bearish pin bar close. Right. So this day today should not have been all that surprising to people. Now, I wrote that the NASDAQ was pulling back in my article yesterday, right? And now, but that was pre-signal, right? We had no signal at that point yet on the S&P because today had not transpired yet. Now we have the signal and it's a long. So on top of that, look, it's a higher low. It looks like it's going for the high. Like I said, CPI or retail sales, they can change this thing, but for now it's closing strong. It's reasonable at this moment to anticipate a test of high in the S&P, right? So that's the S&P, still looking pretty bullish there, at least for the short term. Now, you mentioned the dollar. Let's take a look. You guys are getting good. Well, Alex has been following me for a while. The dollar index is a key component for me. I'm always checking this thing, and it's something you should get in the habit of doing. This is the dollar index. It's stuck. So after this move that we had here, right, I think that was the result of NFP. That was the surprise that NFP caused on the first Friday this month. Since then, look, the dollar's stuck at a resistance. We've gone nowhere. It tried to produce a buy signal, and look, it's just stuck, right? So that's an interesting thing. This right now on the dollar, this is a lower high potentially developing. The problem with the lower high argument is when you have a bearish trend, when something reaches a high and rejects a resistance, it should reject relatively quickly, not produce a whole week of candles in the same area. That's unusual, right? I mean, look how quickly these resistance levels get rejected, right? They spend 1 or 2 candles and they get rejected. 1 candle rejection, 1 candle rejection, right? That's something that's generally rejecting resistances. That's weakness. This isn't weakness, right? So maybe it's waiting for the CPI, maybe it's waiting for one of these reports, but it should have rejected right away, and we should see the dollar pushing here. So we have to be aware of that, right? If we get something that's hawkish tomorrow or whatever, this dollar is likely to break higher, right? Because it's lingering at a resistance. Does that make sense? So in a way, the chart can give us some hints. Now, we can't rely on that idea 100% because things can change very quickly. Perhaps the volume dried up because they're waiting, right? And no one wants to take any meaningful positions until they get some certainty from the report, and which can basically turn this thing negative very quickly, right? Does that make sense? So the dollar right there is in a resistance. We may see the pullback, or this thing may break higher. We need to let the dollar answer that question. There's no way to know in advance. Now, one thing to keep in mind, this dollar move, that bullish movement, that is still in play, okay? Because it hasn't taken out any proportions that would say, okay, this momentum, this structure is no longer in play. Like we'd have to see like the 61.8, get taken out, something like that would say, okay, this leg is no longer in play, right? We can't say that right now. So it's still reasonable to anticipate a dollar bull on the broader time frame. It's still reasonable. If that continues, then what's that going to do for the NASDAQ and the S&P? Not much on the bullish side. Let's take a look at the bond market real quick, because whenever you're talking about the dollar, NASDAQ or S&P, you should be looking at the bond market. These are the bond futures, 10-year note. Look at these. We've had this pullback, right? Recent pullback, which means rates have risen. And we're now going back into an old support area. We're in the midpoint of a range. And I've mentioned this before, this range, if the market may get comfortable and say, well, rates have been much higher, so this is still not too bad. And that's why you may see the market continue to rally, because it becomes insensitive to, like, oh, we've been much worse, right? We're not pushing lows on the bonds, so rates are kind of stuck. Okay, that's cool. That's good enough reason to continue higher for the other markets. Keep that in mind. That's a sentiment thing. That's not like a science thing. That's a sentiment thing. Okay, people just pretty much get used to it and say we've been worse. Now, if rates break through this area, right? These are bond prices. The inverse would be the rates. So if bond prices break through this area, that means rates will be rising more dramatically, and that's where the market may take notice. Okay, so we can't make too many judgments based on this here. And whenever you talk about the dollar, you talk about the major indices, you should check the bond market, because this can at least give us some extra perspective in terms of forming expectations. Does that make sense? All right, let me see what I have over here on TradingView. All right, I see a bunch of questions popping up. So, okay, hey, Milad, good to see you. All right, cool. I haven't forgotten about you. Soon, man. Matos, QNT. All right, let's take a look. QNT. By the way, if you're calling an altcoin, if you want me to see an altcoin, I know QNT is an altcoin. Just please make sure to put USD or USDT after it in case I'm not familiar. All right, so we got QNT here. Let's go to the weekly chart. All right, first things first. Now keep in mind, something like this, all altcoins typically follow the leader. The leader is Bitcoin, right? So we have some Bitcoin weakness, as we saw, some minor weakness, and this is not too surprising to see these things come off of resistance levels. That's what's happening here, right? So this thing's at 131.67. It came off this resistance of 154, all right? So that 154 area, it came off of that. So at the same time, you're coming back to these old, look where it is right now. That's an old minor resistance, and now you're fooling around in the area. So this entire area right here may serve as a support. The thing is, many of these things, they don't trade on their own. So if Bitcoin breaks supports, then this support area is likely to be compromised as well. If Bitcoin can turn around and continue the rally, like the NASDAQ and the S&P, if it can catch up and start producing again, then you'll likely see a buy signal here. But right now, at this moment, there's no buy signal. In fact, if anything, there's a sell signal on the weekly. So not a good place to go long. Let's go back to the smaller time frame here, right, the daily chart. So at this moment, I could see maybe why you're interested in this. You have a pin bar. Look at that pin bar. Nice bullish pin bar off of this support level. So that's, we saw where the weekly was. That type of trade right there, it's a valid trade idea. Okay, that's a potential swing trade long right there. You would put your stop below the pin bar low once the candle is closed, and you'd enter above the pin bar high. The thing is, you're also dependent on Bitcoin. So Bitcoin needs to produce that next leg higher, and then you're likely to see the next leg attempt. Just keep in mind, and you're coming off an area, you're coming off of a support area where that scenario is likely. But if Bitcoin does not do that, then you're likely to get stopped out here for a swing trade. But this is it's certainly an attractive location, and you are getting the setup. So you have a couple of factors in your favor there if you're interested in a swing trade long. So thank you for bringing that one up. That's interesting. I mean, that may be one for me to call. So QNT. Thanks, Matos. Silver. Okay. So silver, XAGUSD. So silver, right? Look, silver basically is just a follower of gold. All right. I know everyone has their own conspiracy theories about silver, but silver is nothing more than a follower. It broke the support there. Okay, which is what, 23, whatever. That was a consolidation support. Shouldn't have broken that if that was going to stay strong. But of course, this is the result of the dollar, right? That dollar rally. So right now, this thing, it's still in this bearish momentum situation, okay, kind of similar to Bitcoin. But if the dollar rallies, right, if the dollar finds legs and rallies, especially on the economic news that we have scheduled for this week, silver can go lower. So with that being said, you are at support levels, okay? This is an old support level for silver, which is what, 2202. So the 22 area, you're getting a sort of a pin bar there, all right, to go along. Of course, the candle needs to close. And then you're looking at the high of 2208. So maybe like 2210, 2215, something like that. And then you'd be anticipating another leg higher up into this area. That would be an ideal area for a swing trade profit target. Now, don't sit there and be like, whoa, there's a bullish trend. This thing's going to go to 50. That's not the game we're playing here. Okay, so you have to be within reason. You have to look at what you're risking in a situation like this. I mean, this is a tiny candle, not very practical to base your risk on that candle. You're going to have to look more at price structure, and that would basically bring you to around here somewhere, right? So that's kind of, there's some risk in that, right? On top of that, silver is not the leader, right? You have to look at gold. So let's just look at gold real quick, right? XAU. USD. Let's take a look at gold, because gold got the same hammering. And now we saw how bullish gold was recently, right? And everyone thought gold was going to 5,000 again. You know how all those big mouths come out. But gold was just reacting to the persistent weakness in the dollar. The dollar has turned, and the dollar may continue higher. If that's the case, these things are poised to go lower. So right now, gold is at 1853. I wouldn't be very surprised to see gold back at this price here, which is what, 18 even, around there. That's a sizable move for gold. That's possible. And right now, there's no buy signal on gold, right? In fact, you have a lower high, so that lower low is likely to ride itself out. That's what you're looking at. So it's a little early to step in front of something like this. One way to play long-term gold or silver is buy the mining companies, buy shares in the mining companies, small shares, right? Like if you were accumulating small shares as this thing was looking horrible, and then you get into a move like this eventually comes along, right? That's when you see those mining shares appreciate in value, right? And it gives you the opportunity to lock in some of those profits here, okay, when it's pushing higher. You're not going to play that game perfectly, by the way. So if you're a really long-term guy on gold or silver and you're holding for 5 years, well, then most likely you're not going to take any profits on a move like this. You're just going to hold on. And when gold does something crazy like pushes 2,000, then that would probably be another place to consider taking some long-term profits off the table. Does that make sense? But you're playing the dollar here. Okay, I don't care about all the gold fundamentals. I don't care about all the special this and all the nonsense. You're playing the dollar. So please keep that in mind. Okay, so let me see what else we got here. So that's gold and silver. All right, let me jump over to the other chat. Burak, how are you? Turkish stock market looks like reversing to a bear market. Can you give your precious ideas about it? XU 100. Okay, so as we know, like I think the Turkish stock market was a result of the weakening dollar, right? On top of actually, no, this here is actually the result of what the inflation, right? We had the, let's look at the dollar compared to this real quick, because this was basically like a function of the dollar, right? As the dollar was selling off, let's go to a weekly chart, right? Let's go to a weekly. This is a weekly dollar, okay? Weekly dollar. Let's go to the Turkish stock market, XU 100. Okay, I mean, look at that, right? So I guess as the inflation filtered into other countries, as we saw, we had some results like this, okay, where the stock market, I guess the value, the price of the stocks would go higher as the value of the currency would go lower, right? So that's usually the sign of inflation. Now, it looks like you're right. It's giving back. Now, can we call that a bear market though? This is the weekly, right? So this is not exactly a bear market. This structure is generally bullish. This is a pullback. That's all this is. It's just, you get desensitized to pullbacks because you don't see any for such a long time. I mean, that's a few months right there, no pullback. And then you get some bearish action and right away, everyone thinks it's a bear market. No, this is not exactly a bear market. Okay, it's just a pullback. It's a corrective structure. Okay, typically corrective structures, like in the eyes of Elliott wave, for example, are 3 legs. I can see 3 legs here, right? You got A, you got B, you got C. You can also measure this, right? You can measure. You're not even at the 382 support yet. So this structure is still very bullish. Okay, I would not call this a bear market. In fact, you should be looking for supports. It's breaking supports now, definitely breaking some, but you should be looking for failed lows. In a situation like this, I would be looking for failed lows. If you're looking for, to play, whether it's Turkish stocks or an index or something like that, you should be looking for a reversal, right? Some sort of bullish reversal, because everyone's going to be thinking short, right? Because they see this. Maybe there's some fundamental reasons behind this, but structurally, this has a way to go before it proves anything structurally bearish. Does that make sense? So you have a support here that's, even though it's broken, right? It's not really broken. It's broken, but there's still plenty of room here for it to fake out. So please keep that in mind. Number one, if that is cleared, then you're looking at this area here, right, as your next support. If that support is cleared, then maybe you can start arguing that it's in a bear market. Does that make sense? So be careful how you use that terminology, because it can plant the seeds for you to start expecting things that are low probability, right? If you're expecting bear market, meanwhile, this thing may be setting up to reverse. You just can't see it yet because the general structure is bullish. All right. So thanks for pointing that out. I hope you find that helpful. Hey, Will, good to see you. All right. All right, no problem. Hey, Peter, good to see you guys. All right, so let me know what other questions you have here. On that Turkish chart, does that count as a double bottom? Good question, Joel. Does this count as a double bottom? This actually, what I would consider this, that part of it, look, we can argue that this right here was a double bottom. You had this first low right here. It was touched the second time. A pin bar developed and a buy signal came right after that, right? Only to give it back right away, right? This got rejected right away. So this part of it would be the double bottom. At this point, you don't have any buy signal here, right? The momentum is clearly bearish. So right at this point, you really can't call this anything except a potential failed low, right? Now, if the next candle or two, right, over as the week transpires, if we have like a bullish pin bar develop there or some kind of reversal pattern there, then that's a failed low. All right, especially if the high of that candle is taken out. Basically a repeat of this situation right here. You get something like that in this area right here, you're basically just overlapping in the same area. It's a failed low, and it's going to suck in a lot of shorts. Okay, that's a scenario. That's not a forecast. That's a potential scenario to look out for. If this thing if the momentum continues, you don't want to be buying that thing too early, right? If it starts really breaking supports, then you want to start looking for lower highs. Okay, in situations like this that are very conflicted, it's best to work on smaller time frames. Okay, I say that a lot because people they need action. Okay, so then if you need action, I'm not saying you, Joel, but if you need action, mitigate your risk, right? Don't take the risk on the time frame where the uncertainty is the greatest. Go to smaller time frames, adjust your profit and loss expectations, and work on the smaller time frames, because you mitigate the risk around the larger time frame or where the uncertainty is greater. Because here, these moves are very large magnitude moves. And if they continue, you don't want to sit there and have an opinion and be like, oh yeah, I think this. And then you get caught on the wrong side of that, right? And it's a dramatic move. What about all the people that were like shorting this? Say, oh, the Turkish stock market is too high. And it just keeps going and keeps going and keeps going, right? You don't want to get caught in something like that. It's very easy to get caught in something like that. Trust me, I know. All right, so good question. Let me see what other questions I have here. So Milad asks for Tesla. Sure, let's take a look at Tesla. All right, Tesla, a market stock, TSLA. So this is the daily chart of Tesla. Let's zoom out a bit. Now, Tesla obviously looks like the NASDAQ, right? Over the previous month and a half. Look at that. There's some strength there. It took out this resistance level here temporarily, and now we see some hesitation there, right? Current candle today, bullish pin bar, and we should see something like that. The NASDAQ is strong today. So this closes like this. So we closed. No, this closes in 15 minutes, right? We get a candle that closes like this, and the high of this candle is taken out tomorrow, 198. What is that? 198.92. So basically 199. You'll have yourself a buy signal on this time frame, and basically that would be a trend continuation, because this short-term trend is bullish. Okay. Now, how far will that go? It's reasonable to anticipate a test of high. That's within reason. Theoretically, it should make the higher high. But if the NASDAQ fails and S&P fails for whatever reason, this will be likely to fail too. Keep in mind, this thing doesn't exactly trade on its own. It may have a wider average range, but it doesn't exactly trade on its own. It follows the market, right? So keep that in mind. I mean, it's certainly a sign of strength here. And I would, if I was looking for longs, if I was looking to trade this, I would be anticipating the higher high, unless, of course, the market delivers conflicting evidence. Does that make sense? So, as far as this level up here, that this is an old support, which is a new resistance. That's basically what it's like. That's what you're pushing into. So you have to keep that in mind. Okay. When it comes to profit targets, you are dealing with a limited area in front of you. It doesn't mean that the resistance will stick, because theoretically the resistance should be cleared. You're just going to need the market behind you for that as well. If the NASDAQ makes a higher high, this is likely to make a higher high as well. Okay. But, and if you're in one of these type of positions, you want to play a very good defense, meaning if it's going to really move, you want to try to give it that room to move. But as soon as a conflicting signal shows up, my suggestion, you should make adjustments. That may mean moving your stop to break even. That may mean taking profit early, whatever. Okay. When a conflicting signal shows up in that situation. All right. Now, let me give you an example. What if you had taken this long over here, right? This sort of an inside bar long situation, trend continuation pattern. And then you got this bearish pin bar a few days after that. Okay, see that? That's a conflicting signal, the bearish pin bar. But here's the thing. It never took out the low of the bearish pin bar. So in a situation like that, you may say, okay, well, maybe I should take some profit off the table, maybe put your stop to break even and be prepared to break even, and then see what the market does from there. And the market continued to pay. You see how that works? So that's why sometimes a conflicting signal may shake you out. So it's not like you want to be oversensitive to it. Does that make sense? All right. So anyway, good question. I see Rav. We have Gala USD. Gala. Let's take a look. Gala USDT. All right. So let's first zoom out to the weekly chart, right, to get some perspective here and some levels. By the way, well, even though I'm not explaining exactly, I'm actually going through a step-by-step process here. Okay, and I'm starting with the bigger picture, getting structure, which is generally the first step, and the second step is I'm looking for levels. Okay, to basically start to give me a picture of expectations that are within reason based on the market structure, not what I think or feel. All right, now when it comes to this Gala here, I mean, look, it had the recent pop like everything else. So let's look at levels. That's a level right there. Okay, this area is clearly a resistance level that dates back quite some time, and price has rejected the level. Okay, so you have this pullback that's basically in effect. Something like this can be helpful if you were thinking about buying in an area like that. And I always tell people, I always warn them, don't buy into resistance levels. But they're blind to that, especially if you're listening to people who have no idea what they're talking about. And then you get caught in something like this. All right. And now if you are caught in something like this, now you're assuming risk that was not necessary if you had just waited. Like I wrote in my article yesterday, I would rather be out wishing I was in than be in and wishing I was out, like in a situation like this. Like if I had bought the top of this, like, man, I wish I wasn't in this right now, because you don't know where this thing is going to pull back to. It may pull all the way back to the bottom. It may make a lower low, and you're stuck in that, right? Unless you, of course, you have a stop and you're willing to take the loss. A lot of people are not, and they just ride this thing to zero. All right. Anyway, so how much is this thing? 4 cents. Now, let's look at, so that's the resistance. The resistance is in play. As we know, Bitcoin has been somewhat weak as well. Also, keep something in mind with these altcoins. You know, I don't know what your time span is on this, like if you're a multi-year holder or if you're just looking for short term, but keep something in mind with these. Regulation is coming. And I know it, you know, no one's talking about it right now because all the mindless big mouths, you know, they're not on top of it because it's not an opportunity for them to capitalize on it yet. They're not warning anyone about it. They're just reacting to whatever's put in front of them and producing content around that. And that is what most of you consume. Hopefully the people that follow me the closest don't consume that garbage, but I always warn about that. What I'm saying is we don't know what the regulators have up their sleeve. We do know that they're going to do something because they said so a couple of months ago, right? And they may surprise the market. These altcoins are vulnerable to that because if they're deemed securities, it's going to change things. And we don't know if that's going to be a positive or negative effect. Okay. That's a high degree of uncertainty. I don't trust these things for a second. Right. And it may wipe a lot of them out. So my point is this, with that risk awareness in mind, if you're looking to get involved in this, right, you're looking for supports. First of all, where are the supports? You have a support here. You also have a support here. Okay. Coincidentally enough, it happens to be around the same price where it started. I don't know if this just started on this exchange on this day or if that, you know, I don't know anything about this, right? But anyway, maybe that's a coincidence. But the point is this, those are your support levels. Okay. So you have for basically 5 cents where it is right now, and then you have 1.016, so basically like 1 cent, 1.5 cents, basically, right? Those are your levels. So those are the areas where you should be considering buying, of course, waiting for some sort of confirmation, but those would be the levels that you should be waiting for. Okay. So as this thing pulls back, this is the daily chart. I mean, look at this. You have the sell signal in play, and now it's a matter of, does it find support in these areas or does it just continue to sell into them, right? Don't step in front of these things. This is not a bull market. All right, so please keep that in mind. Although we see some bullish activity in some of these markets, this is not exactly a bull market. We don't have rates in our favor yet. There's a lot of things missing to invite that stream of money that we need, especially to carry these highly speculative garbage assets to ridiculous levels, right? Asset bubbles come from easy money. We don't exactly have easy money right now, although the market's trying to pretend that we do. Okay, anyway, so good question on Gala. I hope that answers your question. Matos, what's up with Maker, MKR? Let's take a look. MKR USD. By the way, if you like my stream, if you find this stream helpful, please press the like button or the boost button, and also subscribe. It's helpful to me, especially on the YouTube channel. All right, so I appreciate that. Thanks in advance. So Maker, that's interesting. So this look, when you have something that's unusual like this, right? Because not all coins, some coins have their own hype machine going on, right? So there are times when you have an outlier and something will do its own thing and not follow Bitcoin. We see this all the time, right? This is an advantage. This is where a screener can help you find something like this, right? That's not following everything else, and perhaps point out the opportunity before it makes the move. Now, I don't know what's going on here specifically, but I would imagine maybe there's some hype. Let's look at levels and let's look at the bigger picture, because that's really where you want to get your perspective from. So it's obviously acting somewhat strong at the moment, but look where we are. Okay, look where we are. Most of these coins have the same story. This is an old support, which is likely to act as a new resistance. Bad time to be buying now. It's high risk. The next few days may see this thing produce something like this, a bearish pin bar, right? That's not there yet. We don't want to get caught in something like that. So this is not a place to be looking for longs, number one. Number two, where is a place to be looking for longs, and what should we expect? First of all, just zooming out a bit, this is a weekly chart, okay? If this thing sticks and produces a sell signal, and it tried the week before, look at the bearish pin bar, which never became active, or actually was active, but it faked everyone out at the bottom, okay? That pin bar became active, and now it's just squeezing them through. If that sticks, or we get another sell signal in this area, you realize that will be another lower high on the weekly, and a lower low is still more likely to follow. I mean, look at this general structure on this thing. This is not bullish, right? So don't get misled. Don't become blind just because we get like one little green blip, and you know, that's when the greed kicks in and the hope kicks in. Oh, the new bull market. And then you see some title somewhere that, you know, Bitcoin's going to 100,000. It's just going to take a little time, right? And then all that mixes into, oh, I'm going to buy this. I'm going to buy this one because it looks strong. All you're doing is buying into a resistance. Like I said, we have regulation on the horizon. Look at these trends. I mean, this is not a bullish trend at all. So this can very easily be a temporary blip. And if regulation hits these things hard, you're just opening yourself up to something that's generally telling us it's weak. Okay, does that make sense? So that's really, that information comes from the bigger picture, right? That's where that perspective comes from. If this thing was truly strong, it would show us a certain, you know, it would look a little more like the NASDAQ, right? Something like that. Okay, so anyway, these are like mini versions, and they're not even taking out any major resistances. You need to take out this level right here. What is that? 1188, before you can even say anything special about this. All right, does that make sense? So good question about MKR. Spoon, okay, no problem. So from Salobreña, Spain. Oh, welcome. I don't think I've ever seen that city before. Cool. All right. Mindment says, can you take a look at Intel? And what do you think about? Okay, so dividend stocks that pay you something to hold on to them. I think they're a good thing. Of course, you have to be careful with the payments, right? Because a lot of times stocks or companies that give you a very high yield, 12%, they do that because they're usually in a desperate situation and they need to keep people in the stock. So they give you they give you a high yield. You see that sometimes in like oil stocks. Intel, INTC. So stocks that pay you to hold them, quality stocks. I mean, Intel, as we know, we all know Intel. Let's go to the weekly. This is not exactly a garbage stock, right? I don't think they're going out of business. It's just that, you know, semiconductor, they've gotten beaten up. Okay, no problem. I think it's a good thing, right? For a long term, you want to hold on to it. They're going to pay you to hold on to it. It's generally a quality company. You know, how they're competing with AMD and all the others, you know, I don't know. I don't follow them specifically in that regard. But it's generally a good stock. It found support. Look, it found some support here. This thing is going to be sensitive to the NASDAQ. Okay. I mean, just let's go back here. You're in a generally supportive area. If you're accumulating shares of Intel in such an area, right, and eventually the market starts to recover, hey, at least you're not buying highs, and you're getting some sort of payment, but whatever, every 6 months or whatever, to hold on to the shares. So I don't think it's a bad idea at all. I think it's very conservative. On top of that, if you have enough shares, you can even sell calls against your shares, okay, and enhance your return even further. So just keep in mind, with Intel, you're playing the stock market. All right. I mean, basically, it doesn't look like exactly like the NASDAQ. Like if we compare this to the NASDAQ, all right, pull up the NASDAQ chart here. The NASDAQ, it doesn't look like the NASDAQ. The NASDAQ is showing us some strength, while Intel is still in the toilet. But Intel, if they get their act together, right, and the market generally becomes strong, you may see it's not a bad stock. So sometimes these stocks get beat up for irrational reasons. So keep that in mind. It's a quality name. Also, interest rates will affect something like Intel if they have a high debt load, if they borrow a lot of money, right? That may be one of the things that is affecting Intel. Again, I don't know exactly what's causing this on Intel, but it's not a bad stock. How much is this thing now? $28. So if they pay you to hold on to it, just think of it as a market stock, as one of the market stocks. If the general market really starts to improve and rates start to improve, I would imagine Intel would perform better. Okay, I hope that helps. But I don't think it's a bad idea if you're thinking long term. Just control your risk with your size. Don't buy $100,000 worth of Intel and then watch it get cut in half. Right? There's no reason to do that either. Okay, let me see what other questions I got here. Good questions, by the way, everyone. Good questions. Okay. All right, any other questions from YouTube? Can you guys still hear me out there? Because I don't see any. Man, there's like no one watching me on YouTube. Usually I get more people watching me on there. What's going on over here, you guys? Yeah, I'm not going to refresh that screen. I'm going to refresh this one over here. Okay. So let me see what other questions I got. I got plenty over here on TradingView. So what is that? Ali USD, ALI USD. Okay, let's take a look. All right, ALI USD. So YouTube people, let me know if you're still there. Maybe not there. Okay, cool. Okay, Catch, good to see you. All right. So what is this? Alethea artificial liquid. Man. Okay, so I guess this one came out recently. I'm not familiar with this one. This is the weekly chart. Look at this. I don't know if this is a bad tick or if that's real. Okay. If you caught in that, man, this is what I mean about the herd mentality. You can't, hopefully you're not caught in that. If you're caught in that, I don't know what to tell you, but there's not much data to go by here. Okay. You have this recent attempt, whatever that is. You're looking for levels at this point, right? And the only levels that I see here is you have this one, which is how much is that? 2 cents, 0205, something like that. And then you have a level around here somewhere, which is what? What is this? That's around 4 cents, 042. And right now this thing is at 058, right? So you're almost at 6. You're just in the high 5-cent area. So there's no reason to buy this thing right now. All right, especially if this is not a bad tick, if this is real and traders are caught in that, you don't want to be buying that thing right now, because that means there's a lot of longs stuck and this thing is likely to pull back further, right, and squeeze all of them out, push them all out. So here's the daily time frame. You have a bearish pin bar over the previous day. After this looks very similar to that Bitcoin situation, right, that we were looking at. You have a sell signal that's about to be confirmed if it takes out that bullish pin bar low. I mean, I'm sorry, this bearish pin bar low. If it takes that out, you have a new sell signal. And you would be looking for a retest of this area right here, right? The 0378 area. Does that make sense? So coins like this, I don't know what you're thinking. I don't know, what your idea was, but I wouldn't short stuff like this, because even though you have a short setup developing, these type of cheap coins, especially if they're driven on news or nonsense or hype, you don't want to be caught on the wrong side of that, right? People, oh, it's a short, right? And you get stuck on the wrong side. this stupid thing can, go to $2 just irrationally. So bad idea if you're thinking short. If you're going to short something that's more stable, or something that's not going to do one of those ridiculous runs, something like an Ethereum or a Bitcoin or a Litecoin. All right. But as far as longs, I would wait for a support level at least, and at least a buy signal of some kind. Okay. You have nothing there. And usually with coins like this, you're thinking longer term anyway. These are not the best choice for swing trades. Does that make sense? All right, so good question there. Thank you for asking about ALI. Okay, oh, and another good question. What do you think of copper? Copper. Well, so copper is an industrial metal. What is the symbol on that? Is that HG? Yeah, copper futures. So, something like copper, here are the copper futures. And the idea behind that is if there's a great demand in copper, that can point to greater inflation, because obviously they're using copper for construction, right, and to build things. So if there's a high demand for that, that means money's flowing, and that's the rationale behind that. So I think there's some truth in that. Let's look at the weekly chart. Okay, as far as, so you're saying using copper to lead the inflation rate. Well, I mean, let's look at copper, okay, and let's compare this to the bond market. Okay, I'm not going to do the actual comparison chart. I'm just going to pull up the bonds, right, and just look at the bonds. So as the bonds have this, the bonds pulling back, bond prices pulling back was to curb inflation, right? So the inflation was a result of this, okay, the bond market rallying. So as you can see, there's not much of a relationship there, right, with HG, not really, okay. Let's look back here. So, well, we had the inflation from 2020. That's true, but the bond market turned around here. Okay, the bond market turned and the bonds started selling off and rates started rising. And look, copper was still rising at that point, and then eventually it caught up. Okay, and now copper is trying to work its way higher. We've seen an adjustment in rates, right? Rates came off a bit. So maybe there is some kind of inverse correlation. I don't know. It's certainly not one-to-one. I'd have to spend some more time with that. But the idea is plausible. That makes sense. Okay. So if copper makes the higher high, then theoretically we should see rates go lower, right? And we should see an easier Fed come along or something, because something has to be driving that copper. Does that make sense? But just keep in mind, we had that situation where rates were rising, and look at copper. Okay, copper was being reluctant. It was being irrational. So this would have misled you. Oh, copper has made a new high. So, meanwhile, rates, I remember this time, okay, rates were rising, and eventually it caught this thing. So you see that? So something to keep in mind. Don't treat these things as one-to-one. All right, it's a good question though. Okay. Oh, that makes sense. Home as usual. That makes sense. Thank you, Gala. Okay, for no problem. Okay. Matos, I often ask questions and watch the stream only how you analyze the markets. Okay, cool. Well, great. All right. I'm glad I can help. James E. FDR from London. James E. Checking in. Okay, everyone is talking about gold. The central banks are buying, and everyone seems to be talking about how all-time highs are going to be made this year, which makes me very suspicious. Okay, good observation. All right, so I mentioned gold earlier. Let's talk about that, because look, when it comes to metals, there's a lot of drama and there's a lot of hype. And like you said, oh, everyone, you say everyone, never believe the crowd. Okay, I see this pushed all over the place. I see brokers, I see certain Forex brokers coming, well, we have a great community, and you're going to learn from the conventional wisdom of the crowd. Bad idea. Okay, when everyone is onto the same thing, usually they're wrong. That's why it's better to be a contrarian. Okay, I'm a contrarian. Never follow the crowd. And some very knowledgeable people have said that. It's not me making that up. All right. So, and it's true. When everyone's on one side, they're usually on the wrong side, because there's no one left to continue, right? That's the idea behind it. And I've seen so many instances of that. Anyway, so if everyone is saying one thing about gold, you should be suspicious. It's usually when they're saying, oh, gold is going to zero. When they're saying that, that's when you should be thinking, oh, now's the time. When they're hating gold, right? I mean, gold is obsolete. Bitcoin is the new gold, blah, 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 blah. It's all, don't listen to what people say, please. Listen to the charts. So you're asking about gold. Central banks are buying. Well, they were buying, okay? Maybe. We also had a dollar situation. This is the weekly on gold, okay? If you look at the dollar pullback, right, it correlates very well with this. So this was just a reaction to the weakening dollar, right? That persistent weakness that we saw for like, 2 months or whatever. Now the dollar has a little bit of a rally going, right? It has at least an initial move, and gold right away backs off. So we can argue, this is a weekly gold, right? And I've argued this for a while. Gold is in a range, and you're at the high, you're at the top part of the range. Will gold make new highs this year if the dollar collapses? But if the dollar does not collapse and the dollar puts in a leg higher, gold is not going higher, okay? Gold is just not going to fight the dollar like that unless there was some other catalyst to drive gold. But if this is a dollar move, people that bought here are morons. I don't know if they bought the high of the range. Not you, Jamesy, but I'm saying, people who bought the high of the range took the most risk. This is where you should be buying. And this is probably where, if central banks were buying, they were probably buying it in that red area, most likely, not the highs. They usually know things before everyone else. They have better information than we do. Okay, so yeah, I wouldn't go buy any of that stuff. If you're looking to buy gold, wait for support levels at least. This structure is a bullish structure, and there are going to be some support levels coming up, proportional levels like the 382, the 50, right? Those kind of things. They're going to be coming up. But if there's no entry, if there's no confirmation at those levels, right, this thing can easily test the range low. And gold is not exactly in a bullish trend over the midterm. Even the long term is consolidating at this point, right? It's been in this consolidation for so long. So don't become misled just because we see a short-term temporary move and the whole world jumps on one side. Oh, gold. Right? Never listen to the herd, right? These people are not here to help you. Anyone that puts out public information like that is not there to help you, because in this game, if you have an advantage or you have some inside information, you don't share it, because then that reduces your advantage, right? That's how that works. Like these streams that I do, I'm not sharing inside information. What we're doing here is we're extracting value from the charts in ways where we can use it to manage our expectations. That's not an advantage. That's just trying to look at markets in an objective and rational way. We're still dealing with a random market most of the time, as I say. Okay, so that makes sense? Anyway, so good question. Any other questions? I missed your rants. Well, don't worry, Katz. You can always go back. I haven't had too many rants today. I think today was a low rant environment. Okay, I think earlier I was ranting about something, but nothing major today. All right, you guys. So any other questions? Good questions. Good questions. Let me see what else we got here. Any other questions? Any other questions? Questions on TradingView? All right. So you guys, again, if you enjoyed my stream and you found value, please press the like button. Please press the subscribe button. I am working on things to make these streams better. Okay, to always make your experience better. That's important to me. To make sure you have a good experience. There's so much deception in this game, and it's important to have information that's objective. And I always encourage, if you read my articles, I always encourage you need to be able to make your own judgments. I'm sitting here giving you some perspective, but really you should be able to look at a chart and you should be able to make the judgment for yourself, because no one is going to look after your money better than you. All right. So you have all these experts out there, all these people who claim to be experts, and they are nothing but frauds. Being a fake guru is very incentivized these days. There's no accountability, and there's a lot of money to be made. Okay, the better you can fool people, the more you can make. And there are people, that's their whole mission. Okay, they're just gonna put on a good talk and then convert affiliate links. Okay, and it works. So please keep that in mind. Be very cognizant of the source of the information you consume. There's a lot of hope out there. People manufacture hope. Hope is what people want to hear. Okay, are the people that you're listening to, are they actual experts in the business? Are they industry professionals? Are they CMTs? Or are they just someone, oh, I know how, I've been looking at charts for 2 years and I've learned a lot and I want to share it with you? Or is it one of those people? All right, so please be cognizant of what you consume. Your goal should be to make the judgment yourself, not follow others. Okay, so that's what I hope to instill on you as you go, and I hope I can provide some more value in that area as well. All right, you guys, so I don't see any more questions. If I missed your question for whatever reason, you catch me next time. I'm here every week. All right, so everyone, enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you so much for watching.